honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good Thursday morning. Welcome to Financial Issues. Today's Thursday, June 20th, 2024, and we're so glad that you joined us. All of our new listeners, all of our old listeners, a special shout out to all of you joining us on NRB TV. If this is your first introduction to financial issues, we hope that you will stick around and learn more about how we can help you in your stewardship journey. So we believe we have a twofold mission here: defunding darkness, where we help you keep your money away from investments in companies that would use it to fund an agenda of darkness, like abortion, pornography, the LGBTQ agenda. So we do this by giving you a way to invest biblically responsibly. Our second bold mission is to fund the light, to encourage you to be obedient, to be a joyful and generous giver. So we're so glad that you tuned in and that you're learning to be a better steward. Our stewardship verse today comes from Proverbs 13:11. Wealth gained hastily will dwindle, but whoever gathers little by little will increase it. Seth, what are your thoughts?
Yeah, it's a good verse, Shana. It's one of those core verses of our ministry for sure. This phrase, wealth gained hastily, by the way, it could mean literally wealth gained hastily. So like get rich quick schemes. Could also be translated as wealth gained by illicit means. So either of those we see here, that's not a good thing. The result of that is that the person who tries to gain wealth that way actually will end up losing it. Clearly what we see here is the scripture's method for gaining wealth the right way is growing it long-term, little by little over time. And that's really one of the chief pillars of our ministry here, Shana, is long-term investing. So it kind of leads us to a bit of a teachable moment here. What exactly is long-term investing? As our financial expert, Shana, how would you describe long-term investing?
Well, you know, that's such a great verse to meditate on when thinking about an investment strategy. So to simply answer your question, long-term investing is when you have a time horizon of at least 8 to 10 years. So you want to, we don't recommend a buy and ignore strategy where you just buy certain things and just never look at it again. We have a team of analysts that looks at the stocks that we have recommended in the past. We let you know if there's any reason that you should sell them. In fact, we did issue a sell alert this week. So make sure that if you're a partner, you did get a chance to check that and act on it as well. And then we build this plan out for 8 to 10 years. And once you get your portfolio built, we help you to monitor it and manage it well.
And Shana, I think it's a good time as any to kind of give the disclaimer that this probably isn't the strategy for people who are looking for get-rich-quick schemes or looking to do it short. If you want to be long-term, this is the place for you. But if not, it might be good to look somewhere else. Yeah, for sure.
Absolutely.
So kind of a follow-up there, Shana, is how does long-term investing differ from some of these short-term schemes, such as day trading? How does it differ from other get-rich-quick schemes? What do you think?
Yeah, well, there's definitely a difference between trading and investing. Yeah. So with long-term investing, you know, what you're doing is you're looking at companies that you want to own, that you want to take an ownership position in. So when you're looking at stocks just aren't some arbitrary thing that you just, let's throw a dart at a dartboard and see which stocks to buy. I mean, there was a time when you can be successful pretty much doing that, but you really want to look at this as an investment opportunity. So publicly traded companies post their results. They give detailed information about their sales. You can look back at their sales history, their earnings history. You can look at the stock price. You can look at the valuation. You can even, as a shareholder, you can listen into conference calls that are given by management for shareholders once a quarter. So you're really looking at a company and saying, hey, this is a good company. They have a good business plan. They have good management. They have a history of good results. I think I want to be an owner of that company. And then you accomplish that by buying shares of the stock. Trading is much different. It is very short term. It's dependent on emotions. So if you follow the stock market from day to day, you'll see one day it's up, one day it's down. It can move up a lot in one day. It can move down a lot in one day. If you listen to financial news, you can hear about stocks that are moving up or down in by a lot. So you can really be tempted to try to get rich quick. You can, there's no shortage of stories out there that you can find of people who invested in a particular stock and, made a 20%, 50% or 100% return in a very short period of time. And that can motivate you to try to do the same thing. Well, you probably don't hear the stories about all the people who didn't win, who lost 20%, 50%, or even 100% by taking risk that they had not calculated the cost on. So, short-term trading is more like gambling. I mean, emotions are very unstable. In fact, in short-term trading, you're fighting your own emotions of fear and greed to try to make a return. So long-term strategies end up being better for your blood pressure. Not really. I mean, I'm not a doctor, so I can't really say that. But, for your emotional well-being, a long-term strategy is better. If you know, hey, I've done my homework, I've evaluated this, I think in, 5, 8, 10 years, I'm going to be better off in this position than I am today. You can take the ups and downs a little bit more easily without really worrying about it. And a long-term strategy can be better for your taxes. Because if you're doing the short-term trading stuff, you've really got to battle, if you're in a taxable account and you make a gain in it, the short-term gain is typically taxed at a higher rate than a long-term gain would be. So if you're trading, not only do you have to fight emotions, but you've got to overcome any transaction costs you might have in doing that and taxes and still try to come out ahead.
Yeah. Shana, what a surprise, that the Bible says long-term wealth building is a better option in the outcome. And then look at we see it happening here. That's sarcasm. Of course, it's not a surprise because God ordained it to be so. Right. It's a great comfort for us, I think, and for many people out there who might be, maybe despairing a little bit and thinking, okay, can I really keep at this for another 5, 10, 15 years? Yes, you can. This is the right way to do it. Absolutely. Yeah. Yeah, it's good. Shana, you talk often about time in the market, how that being the key to success. How might you encourage someone who maybe is despairing a little bit, or maybe they're fearing that they started too late? I know we have a lot of older listeners, and some of them I know have asked, I haven't gotten to start investing. I'm in my 60s, and I haven't gotten to start yet. How would you encourage them?
Yeah, let me slow down and say that time in the market is a better strategy than trying to time the market. Yeah. And so, if you're young and you're listening right now, Mandy, you have an advantage. Yeah. You can start putting away a little bit of your income, and over time you can really accumulate a nest egg. If you find yourselves on the other side of that, well, I would say, don't buy into the lie that it's too late. You haven't done anything, so you might as well not do it. That's one of the things that the enemy will tell you, just to get you, to keep you in the trap that he's got you in. So it's never too late to start. But you have to change your strategy a little bit. If you're young, you can be really more aggressive in your investment strategy because you're not going to have to sell the investment in 1 year or 2 years or even 6 months. So you can really invest the money and give it time to work because it's not, long-term investing has proven successful, but it's not a linear track. It doesn't just go up. It goes up and down. Now, if you're not so young, you still have to be aggressive, but you have to be aggressive in how much you are putting away rather than adopting an aggressive strategy. So don't try. I would just encourage you to avoid the trap or the risk of trying to take higher risks to get higher returns to make up for time. Just be more aggressive in how much you're putting back for retirement.
Great stuff.
I think we got a break here.
Yep.
We got a break here. We've got more to talk about, though. So we're going to finish up these thoughts when we come back with more financial issues. And we're going to get to some of the partner and listener questions that you guys have been sending in. If you've got a question, send them in. Go to financialissues.org and click on the Ask Shana tab. Don't go anywhere. We'll be right back. More financial issues coming right up.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of, this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Well, folks, we're talking about one of our pillars of our ministry. Core pillars is that we're long-term investors. We're not in this for short-term gains. We're not day traders. We're in this for years. That target is that 8 to 10 to 12-year mark. And Shana, that's actually where I wanted to pick up here, because my guess is that we have some listeners who probably have hit that goal, and they might be wondering, what do I do now? I've been investing for 8 to 10, 12 years. I've built up a nice nest egg here. I've seen some success in the markets. Some things are up, some are down. Overall success. Should we take our profits and consider it a smashing success, as it were, or should we keep investing and keep on building wealth? What are your thoughts?
Well, we've got from a practical standpoint, we've got asset allocation models that address that. They're kind of age-based. So, as you go from one age group to another age group, it shows you how to modify and change your portfolio over time. But, only God knows how much time we're allotted. So I've been doing this for a really long time, and people tend to find financial advisors when they're approaching retirement. So I often hear people say, I'm 65 or I'm 70 or I'm 80. I don't have time to be long-term, And my response is always, well, tell me exactly how much time you have, and I'll formulate a plan that's tailored just to that. And, I always get a good chuckle out of that. But, a 65-year-old has an average life expectancy of easily another 20 to 25 more years. So, same thing if you're 75, you've got, on average, at least another 10 years. Even if you make it to age 80, the statistical probability goes up that you've at least got another 5 to 10 years. And so you really just never know how much time you have left. So it's good to take that long-term approach. And the real practical answer to that is to use the asset allocation models that we have on our website. So
absolutely,
you can progress through those as your age progresses.
Yeah, and for new partners, it's very easy to access those. If you're still becoming familiar with the partnership, just go to the left-hand side and go down to asset allocation models, and you'll find all of them there. That's good. Last question here, Shana, on this topic. In a society that is really driven by instant gratification, and I think that's especially true, what are the internal qualities that you feel are necessary for someone to be a successful long-term investor?
Yeah, I think for me, the bottom line is valuing and honoring God over profit. So, really resist the draw, the temptation to be driven by greed, and rather just focus on, honoring God, putting God first in the portfolio, not investing in things that would grieve the heart of the Lord, and promoting this dark agenda that corporate America, that not all of corporate America, but some in corporate America are promoting. They're giving dollars to agendas like abortion, pornography, the LGBTQ lie that, really leads people, and especially more and more young people, down potentially the path to hell. And so we don't want to be funding those kinds of agendas. We want to be just investing in good companies that do what they do, operate in excellence. They make a good product, make a good service, and return value to shareholders. And stay focused on that principle of little by little.
Amen. Good stuff here, Shana, as always. Let's move over to some partner questions here while we have the time for it. Jason is the first one. Jason is 40. His wife, who's 35, they both have a Roth IRA. Recently, financial issues. He claims has been a little hesitant to recommend putting new money into the market. With us continuing to contribute to our Roth accounts, when should we begin to buy stocks again versus just letting it set in the new money market account? And then he has a follow-up there about a recommendation for what to do with new money that we put into our accounts. What do you think, Shana, about Jason's questions?
Yeah, so Jason and his wife are 40 and 35 years old. Speaking of long-term time horizons.
Seriously, yeah.
Statistically, I mean, nobody knows except God, but statistically, they have a really long time ahead of them. So, for them, and because they're putting money systematically in, putting it in every single month, I wouldn't hesitate. So the hesitation that he has sensed and that we have, written about a little bit really applies to people with large lump sums already in cash, or those who are 55 and up, those who are closer to retirement, or maybe who are in retirement. And that's just, we're not suggesting that you sell everything because we definitely see this correction coming. We're not saying that at all. It could happen, it could not happen. Statistically, from a historical perspective, corrections happen pretty often. So, we would probably be right if we said a correction is coming, because you have those financial professionals out there that are always saying that. Eventually they're going to be right. But if you're young, you're doing systematic investing, putting regular amounts of money in on a regular basis, just keep doing what you're doing.
Awesome. Ronnie's up next here, Shana. He is 61. He's saying, how do you record a CD ladder for CDs in the tracker? Do you combine them into one, or do you list separately? Do you use a generic name? What do you think for Ronnie?
Yeah, so that's a great question. And what Ronnie is referring to is our portfolio tracker. That's a tool that you have access to as a partner. You're able to manually input all of your investments into the portfolio tracker. And once you do that, you get an output of these charts, and it shows you side by side what the recommended plan that you've chosen, the asset allocation model that you've chosen, right next to where you actually are. So it gives you the ability to compare where you are to where you should be on a sector by sector or category by category basis. So it gives you, in a split second, you can look at the output and you can know, okay, I've got too much in this one particular sector, so I need to get rid of some things there, and it needs to go to this other sector that I'm underweighted in. And so the way that you input your CDs, when you look at the fixed income buy list for CDs, there's a ticker symbol there because you have to have a symbol to put into the portfolio tracker. So the symbol is just a symbol for cash. It's going to bring up $1 per share, and then you just put the total dollar amount of your CDs in. You don't need to list them all out separately. You can also use the ticker symbol for whatever core cash account you have in your brokerage. That works too.
Good stuff there, Shana. Jumping back now to the strategy and the specifics of it with where we're at right now. David is an income investor. He's 71, and he's quoting part of our commentary from earlier in the month of June, which says, don't hesitate to stay temporarily heavy in cash as long as your cash is paying over 4%. His question is, where do I get 4% on my cash? Schwab's sweep account is paying just under 0.5%, so not that much. What do you think, Shana?
So I would just go into your Schwab account and see what options you have for a core account. You may be able just to switch that to something else that's paying over 4%. If not, you could, keep the minimal amount of cash in that sweep account and use something like FI3. That's to find that. Just go to our buy list on the fixed income page, and you can check that out. That's an ETF that you can use to improve the yield.
Awesome. Next one up, Shana, we have is James. James doesn't say his age. He is wondering about UT66. Are they in serious financial trouble? He bought it at $35 under Dan's recommendation. He's wondering if they're about to go bankrupt. What do you think?
I don't see signs that they're about to go bankrupt. Although the company is down in share price, it is still a hold for us. You're getting paid 6.5% dividend just to wait it out. So this particular company has increased their dividend for more than 30 years. So we're hold on it.
Yep. Good, Shana. Next one is Bob. Bob is a little curious about the buy list. He's wondering why CD90 is labeled as a small cap when Google says something different. And he's wondering about another company that's labeled as mid cap. Google says something different. And then he thought about buying CS72. That's actually the company that he just mentioned. But the market cap that Google provides and the price variability over the last year looked ominous. So he needs some more consumer staples and only looked at CD90 when he saw what seemed to be like a suspicious CS72 market cap value and price variation on Google. He's 70 years old, Shannon. Do you have any insight for Bob here?
Yeah. So that's one of the things that we're trying to address with the changes to the new website. The small cap, mid cap designations are manual inputs. So a market cap can change quite rapidly. A market cap is simply market price per share times the number of shares outstanding. And so, as companies grow, they cross over into categories. They go from a small cap to a mid cap. And so some of these may just not be updated. We try to keep them updated as best that we can. But in general, a mid cap, the easy way to kind of remember that is that a mid cap, and this can vary too based on sectors, but a mid cap is going to be a company with a market capitalization of between $2 billion and $10 billion. So, if you're right there on the cusp, if you're at 2.1 billion and you have a bad day with the stock price, you can go from being a mid cap to a small cap. So if you just kind of remember that, anything over that 10 billion is considered to be a large cap. And then you have a micro cap class that is around 800 billion or less is considered like a micro cap. And then between that and the mid cap at 2 billion is a small cap. So just know that companies under, say, $2 to $3 billion in market cap are small or micro, and they can carry higher risk with them.
Awesome, Shana. Might only have time for one more short one. We'll see how this goes. Russell is 72, and he's saying, where do I find a biblically responsible CD to invest in? That's a good question.
Yeah. So the way that we see it is CDs are loanership investments. You're not taking an ownership position, like let's say that you go down to the bank and you buy a CD. Basically what you're doing is you're lending the bank or the financial institution your money. They're paying you an interest rate for the use of that money. They're going to loan that money out and make money off of it, and then they're going to return your principal at some point in time. So you're not taking an ownership position in the company. So your CDs in general should be biblically responsible. You can find CDs to invest in if you have a brokerage account. You can do a search in there, and you can look for different maturities, different banks. You still want to mind the FDIC insurance requirements, but you should be okay from a biblically responsible standpoint if you're doing CDs. Well, folks, if you're listening to a short version of the show, we have to bid you a farewell today. But if you're listening to the live version or maybe a podcast, don't go anywhere, because we're going to come back with more financial issues right after this break. Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Samuel Case, news anchor with FISM News, sits down to read real comments from real viewers.
All righty, let's see a bigger one here from Spectrum Nomad. That's a fancy name. Finally, a non-biased news source that tells everything how it is without having to push their opinion. You know, it's not necessarily true we're not biased. We are Christian, we are conservative, but you're totally right that we don't try to push our own opinions or commentary in the story. So it's really great to hear that you're picking up on that.
I just love the first book of Exodus. The king says, the Jews are too many. Get rid of them. I command you to kill the firstborn. But the midwives to the Hebrews heard the order, and what did they do? They defied it. And God dealt favorably with the midwives and gave them families. He blessed them for loving life. He blessed them for saving babies. We have re-entered the death cult in this country. You think about how much we elevate death, whether it be the chopping off of parts and we call it transgender care, whether it be shouting our abortion, and you see it so beautifully in John 10:10. It is the divide of the entire scriptures. Now, most people would say John 3:16, but think about it. The enemy has come to lie, steal, cheat, and destroy. I have come to give life and life more abundantly. That's the whole ball game, everybody. It is everything. And we have to have the joy of Jesus Christ to enjoy life and to protect it. It's a gift from above. And Preborn is leading the charge.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues, folks. Good to be here with you today. A couple of announcements for you, partners. Phones are open, by the way, for all of you, 610-363-1110. But partners, we had a conference call yesterday, so make sure to check that out. It is posted. Great information from Shana there. A lot of good financial information and strategy information as well that we can't go into quite as much depth on the live show. So make sure that you check out that conference call from yesterday. And if you're not a partner, you want to become one, you can do it today, and then you can have access to that conference call as well. Also, I did want to remind you all, we do have Bible study tomorrow morning. This is not just for partners, it's for anyone, but feel free to join us, 6:30 Eastern time. We'll be in 2 Timothy chapter 1, verses 3 through 5. You can check out the login information just by going to the website, click the resources tab, join our Bible study, and the call-in information's right there. So the markets yesterday, I messed this up on the show yesterday. Yesterday was Juneteenth, the federal holiday, and the markets were closed yesterday, so we didn't get any movement yesterday. The pre-markets this morning, as they opened, they were a little bit on the rise, though somewhat muted, and that is actually how they have opened this morning as well, confirming, yes, here we go. We got the updated numbers here. Yeah, so the Dow Jones is just below the flat line. The S&P 500 is a little bit further above right now, about 0.4%, and the NASDAQ is up about 0.1%. So the markets seem to be looking to NVIDIA once again as it now set the record for the highest ranked publicly traded company, highest valued publicly traded company on Wall Street as of right now, surpassing Microsoft. So we'll see what happens with the markets there. We got some wisdom here, folks, from Dan Celia. I'd love to share this with you as we come into our third segment. This first one from Dan is a really good one. It's doing the opposite of what most people do on Wall Street. And you're going to find that in your investing, also in your Christian life, you're going to be swimming upstream. That happens as well in your investing. So here's some great wisdom from Dan Celia on doing the opposite of what most of the investors on Wall Street are doing. Here's Dan.
Apparently, there are a lot of traders, because I wouldn't consider them investors, but there are a lot of traders out there that believe that the sky fell on Wednesday and they need to run out. If you believe that, then man, run out, because trust your instincts. You might know something more than I know. I don't know. But I'm not going to talk about that because I don't want you to, but in my conference call, I was talking about I'm trying to teach you to do exactly the opposite of what everybody on Wall Street knows you're going to do. I remember being there. I remember saying, don't worry about it. Mom and Pop will make it. Are we going to get in? No. The fear hasn't built up yet. Don't worry. They'll pull through. And they always did. All the inexperienced investors, they always pull through. They always end up selling low. They do it all the time and drive it even lower and drive it even lower till finally everybody says, well, the market's rigged. The market's not rigged. The market's not rigged. The only thing that happens in the market is what you create, because you all panic and you shouldn't be in the markets. And everybody on Wall Street's laughing at you and knows that. And for 25 years in February, I've been trying to teach people to stop doing that and try to take advantage the same way that they're taking advantage. But I understand how the human nature and the behavior works. And I know no matter what I say and how I say it and how many times I say it, I'm not going to change it. But I have been trying to get everybody away from that. And the only thing I can say is I don't begrudge you for being nervous and losing sleep over it. I don't begrudge you for that. That's fine. All I'm saying is, why would you put yourself through that pain? This is the stock market. For 138 years, it's been doing this, and it's going to never stop. It's always going to do this. There are always going to be dramatic downturns and dramatic upturns. There's always going to be do-nothing times, flatline times. There's going to be ups and downs. If you are watching it every day and you're worried about that, then you should not be in the market. You're going to get an ulcer. Don't do it. Don't do it. So I am telling you, not only sell, but I would sell out of everything. I would sell. It's silly to keep the best. It's the reason why we diversify. Somebody called me yesterday, said they were down, I think it was 60% in a stock, yet their overall portfolio was up. And that is the perfect testimony to being diversified. So why are you worried? I've never had a portfolio where I didn't have something down dramatically, me personally or anyone that I was managing. I don't care about that. I care about, I have X amount of dollars in the portfolio, am I up or down? Not X amount of individual positions, and I'm going to stress over the ones that are down without ever looking at the ones that are up. And the ones that are down that I'm selling, guess what? They're the ones that are going to be up in 2 years carrying your portfolio so that your whole portfolio is now up. But you're going to lose that advantage in being a long-term investor of the things that are down today being the things that are going to be up tomorrow, when the things that are up today are going to be down tomorrow. You're going to lose that. You're never, ever, ever going to have stability in your investment portfolio. So with that in mind, you should never, ever, ever be an investor. I'm just saying. And so don't partner with the ministry if you don't understand that critical critical part of what we're trying to teach and what you need to know, because you're not going to be a very happy camper.
And folks, of course, we're not telling you here to not be a member of Financial Issues, to not be a partner, but we are saying, you know, if you don't have that long-term outlook, this probably isn't the strategy for you. And if you don't have the overall vision of being able to say, you know what, overall my portfolio is doing good. I got some that are down. Maybe they might be down considerably, but I got some that are up as well. And just like Dan said, you never know with some of those stocks that are down, they could be the ones carrying you in a couple years. It's a really good reminder, folks, to have that big picture as you are an investor. This next clip we have here kind of speaks to that same thing. It's the fear of missing out. Now, this is from 2016, but it still applies today, especially with our strategy here in 2024 as we're seeing what's happening with the upcoming election and different things like that. Here's Dan Celia on the fear of missing out.
Right now, there's a different kind of fear factor coming into the markets. And it's the fear that I am most afraid of for all of you. And I notice this because I see the emails and the phone calls that I get. There is a fear of missing out. And so now the mom and pop investor, as they call them on Wall Street, the average person, running into the markets, concerned about missing out. It's been 3 weeks, folks. 3 weeks of uptick. We're just barely ahead of where we were at the end of 2014. Not the end of 2015, the end of 2014. And there's this fear of missing out, so you're getting in. Please don't do that. Please be patient. Let's not compromise your cash positions. If you're 100% in cash, then that's too much and you need to start weaning. But don't compromise that cash position. Be very, very careful of buying in to this fear, because I don't want to see that happen.
You know, this is a strategy that is based in wisdom and is based in taking proper care of what you have. Now, I don't want any of you, and I know Dan didn't and Shana doesn't, we don't want any of you to be driven by fear. We want you to be driven by wisdom. And sometimes I think we can confuse and conflate those two things, because right now especially, but I think in general as well, our strategy is based a lot on capturing the base that you have and not sacrificing that for the sake of a higher return on the upside, but capturing that downside protection. If you have that base, that's really good, and those upside swings will come as well. Hope that was helpful for you there, folks. We got the Ag Report coming up here, and then we'll talk more about this coming back on the other side of this break. Here's Craig Halgard with today's Ag Report. We'll be right back after.
This is Craig Halgard with your Financial Issues Ag Update for June 20th. Well, corn benefited from a combination of buying ahead of the Juneteenth holiday and a drop in crop ratings. This week's report saw the good to excellent ratings drop 2 points when analysts were looking for a 1 point drop. Still, with the crop at a rating of 72% good to excellent, the crop is well ahead of its 5-year average of 64%. The forecast held on to significant rains for the upper plains and the western corn belt for the next 5 days, and that should boost the conditions and growth in that part of the growing region. On the close, we had July corn 6 1/4 cents higher at $4.50 per bushel. Benefits also came to the soybean market in terms of a weather rally. The weather models indicating that the eastern corn belt is going to be without normal rainfall for the next 15 days. When you get the beyond 15-day forecast, the outlook shows a modest chance of normal rainfall, and that bulled up the beans in the latest trade. July beans at the close were 16 1/4 cents higher, closing at $11.74. Wheat was hit with a triple whammy as Russian wheat crop hopes rose, Russian cash prices fell, and U.S. crop conditions improved. Rains continue to help the Black Sea wheat production prospects, and we saw the Russian FOB values drop by $7 per metric ton. Here in the U.S., crop ratings showed a 2% improvement when the analysts were looking for an unchanged rating. 49% good to excellent, the U.S. crop is 3 points better than the 5-year average. As a result, Minneapolis July wheat was 5 3/4 cents lower, $6.32 3/4. Kansas City dropped by 4 3/4 cents, closing at $6.75, and Chicago was 9 1/2 cents lower at $5.82 per bushel. Cotton futures got a bounce on a weaker than expected crop ratings. At the close, July futures were 109 points higher at 71.03. Livestock futures, on the other hand, were all weaker. August live cattle were 70 cents lower, $182.10 per hundredweight. August feeder cattle were $1.37.5 lower as they settled at $259.95 per hundred. And we had August lean hog futures futures 30 cents lower at $91.57 per hundredweight. Class 3 milk futures repeated their pattern of setting new highs and then retreating. Right now we're in the retreat phase. At the close, July futures were down 56 points at 1961. This has been Craig Haugard with your Financial Issues Egg update. We'll be right back with more financial issues after this.
Fear and uncertainty can cause us to hold things tightly and rely on ourselves. But during uncertain times, as believers in Christ, we are called to surrender fully to our sovereign God. The call to surrender to Jesus is one step in our growth in holiness. And it doesn't just mean you give over a few things. It means He gets it all, including our finances, our investments. Learn a biblically responsible investment strategy proven over 25 years. Keep the money God has entrusted to you out of companies that participate in things that God detests. Fully surrender. Become a Financial Issues Partner today. Learn more by going to financialissues.org/join. That's financialissues.org/join.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, today's show is sponsored in part by our friends over at Samaritan Ministries. If you haven't heard of Samaritan Ministries, you can check them out today. SamaritanMinistries.org. You can call them also 1-877-764-2426. That's our ministry health plan for FISM, and we love Samaritan Ministries. So check them out today. Also sponsored in part by our friends over at Preborn. I love Preborn. Preborn is just... They do some amazing, amazing work. You all did an amazing job with our May campaign, funding the light with Preborn. And if you didn't get a chance to join us in that May campaign, it's never too late to give to Preborn anyways. So you can do that today securely. Go to financialissues.org, click the Preborn banner, or just dial pound 250, say keyword baby. That'll take you to the Preborn call line, and you can give securely there. So a couple of headlines I wanted to get to here, folks, before the end of the show. The first one here is the Federal Reserve is simply waffling on rate cuts. No one knows what's going to happen. So Fed Reserve Bank of Boston President and CEO Susan Collins, she says that she, quote, could imagine scenarios that would be consistent with 1 or even 2 rate cuts this year. That'll clear it up, won't it? Good grief. She told Yahoo Finance that there's some evidence, quote, the economy is coming into better balance, but that it will take some time for inflation to cool to the Fed's 2% target. I feel like all the Fed spokespeople, every time they come on the mic, they say something to the lines of that, and it doesn't clear anything up. She warned about being overly optimistic about encouraging economic reports, however, noting that monthly data has been really volatile. So not much clarity here from the Fed, folks. I think we can give the Fed some grace because certainly human nature is to try to play both sides in a situation where you really have no control in your leadership of it. And I don't say that to come at the Fed in any way. Shana has talked about how she doesn't envy the Fed's position right now, and I don't either. I think the Fed's in a really tough spot. But I do think the Fed doesn't really know what to do. It's kind of a similar situation to this. If I hear one of my kiddos complaining in the other room, say One of them hit the other one, allegedly, and so Eloise is upset, and I go in, and Josiah's got a giggle on his face, and I can sort of guess what happened, but I don't know. It's kind of tough to figure out and kind of tough to lead in that situation when I wasn't actually there to see it, or vice versa, obviously. I think in a much greater sense here, the Fed just isn't really sure what to do, and I think like many of us, they're pretty much just playing the waiting game. They have their eyes on the outcome of the 2024 election coming up. And that's going to be very important for the fate of the job security of a lot of these Fed members. So they're trying to be very careful with what they say here, not really saying much, not giving much clarity, frankly, on what's going on. In some other news, the federal budget deficit will rise to almost $2 trillion this year, according to the CBO. I saw one of you, I think James mentioned in the comments yesterday that this headline was coming out here. So the estimate is that the federal budget deficit will reach $1.9 trillion this fiscal year as government spending continues to rise. That's a 27% increase from February's estimate. CBO attributed the sizable increase to several factors, including additional $145 billion in spending on college loan forgiveness. So that is taxpayer money. We are now on the hook to pay off the loans of people who pledged to get their gender studies degree or whatever other degree they're getting at the big state-funded university, and now not paying off that loan, and instead it's being burdened onto the taxpayer. That is what that is looking like there. Deposit insurance spending projections jumped by $70 billion because the FDIC is not recovering payments it made to resolve bank failures last year as quickly as the CBO previously anticipated. Also, the forecast factored in legislation that increased discretionary spending by $60 million. Medicaid spending increased by about $50 billion. The report also cited $95 billion in supplemental spending for, not the United States, but for Ukraine, Israel, Gaza, and Taiwan. The deficit for 2024 is projected to be 7% of the GDP of the United States, and by historical standards, that represents a remarkable shortfall for a time when the nation is neither at war nor experiencing a severe recession. The lesson for us here, folks, as we say often, is we do not spend our way into prosperity. We will not. This is a personal lesson for us, and we also see it for our government. Financial prudence, financial wisdom, not spending what you don't have, that brings blessing. On the other hand, spending money that you don't have is a one-way ticket to poverty and hardship. I heard an old saying recently that debt is the money of slaves. And, if gold is the currency of kings and silver the currency of gentlemen, debt is the money of slaves. And so we need to pray that our country will turn course here with its financial spending, or perhaps misspending, if that's even a word. In some other headlines, more companies are announcing bankruptcies, shutter operations, citing inflation. U.S. retailers are closing 3,200 stores this year. That's a 24% increase from last year. More and more companies declaring bankruptcy, shutting down operations, citing inflation, high prices. There was an episode we did recently where Shana talked about kind of the ins and outs of bankruptcy. I don't have it on hand right now, but I'll try to find that for you all. Maybe we can mention it on tomorrow's show if you're interested in that, understanding more of what bankruptcy is. So according to this research firm that did this study, drugstore and pharmacy closures alone accounted for 8 million square feet of shuttered retail space. Roughly 30 retailers account for these 3,200 store closures. Finally, one more headline here. Gen Z is ditching traditional investments for classic cars, sneakers, and wine. Younger investors are not investing in the ways that their forefathers did. This is from Bank of America. It says only 14% of Gen Z and millennial investors think that stock investments are the best way to build wealth. That's compared to 41% of investors over the age of 44. Nearly 3/4 of younger investors, that's about 72%, think that investing in stocks and bonds is no longer a viable way to generate above average returns on investments. Millennials and Gen Zers instead are pouring their money into alternative investments like cryptocurrency, digital assets, collectibles, antique cars, vintage wine. And they also say they get investment advice on social media, compared to older investors who say that they would make investment decisions based on their own research. Now, youngsters, I think it's important, if you're listening to the program, to heed the advice of the wise. I am not necessarily saying that millennials and Gen Zers are all bad investors, nor am I saying that those alternative investments can't be profitable. What I am saying is that there is a proven way to do it, and also that there's a concept in this world of heeding the advice of those who've gone before us. Young people generally are not that smart. And I can say that freely because I'm one of them, and I'm learning a lot every day. I am one of those young people. And so as a Christian man, as a godly man, I need to humble myself and come before my elders, those who've gone before me, and say, how can I learn from you? Not, I'm smarter than you, I think I'm better than you, so I'm going to blaze my own trail and do it my own way. A good scripture passage to be reminded of this is 1 Kings 12, verses 6 through 11, where King Rehoboam, the son of Solomon, rejected the counsel that was given to his fathers by the elders, and he instead listened to his foolish friends who were as foolish as he was, and it ended up dividing the kingdom. There's great wisdom, folks, in realizing when you are lacking in wisdom. And I know that sounds like a bit of an oxymoron, but when you realize I am lacking wisdom, I need to seek wisdom, that is a wise move. And admitting you're not as smart as you think you are, and so seeking the help of those who've gone before you, is a wise thing for a young person to do. And I believe one of the best things you can do as a young person is listen to this show. Listen to the advice from Shana. She's got 25 years of experience in this business. She was mentored. She herself received the wisdom from Celia. And so she can pass that along to you as well. That's good advice for us here, folks. I'm not going to say anything more about the specifics of those investments. I understand. Listen, people can find crazy ways to invest their money and make it work. What I am saying is there is a principle of heeding the advice of those who have gone before you, those who are wise, obviously. I think it's good stuff and good reminder for us. All right, Grant, I think we got time for a couple partner questions here. Let's get to Ed's. I know it's not a question, it's more of a response.
Yeah, so Ed says, not a question, but in response to a caller on Friday about returns equal to the stock exchanges. I started with Dan in 2019, and following his 65 and over, I've averaged just under 10% return on my portfolio of stocks. I'm very grateful to Dan and now Shana for their advice and information.
Ed, that's awesome, brother. I appreciate your testimony so much, man. And it's great to see that little by little growth that you have. And, you know, folks, we hear testimonies about this all the time from Ed, people like Ed who follow the strategy. They're well diversified. They aim for the long term, and they resolve to be biblically responsible. And they end up getting some form of returns. Now, I want to be clear, okay? This is a disclaimer. Following our strategy gives you no guarantee of a financial windfall beyond your wildest dreams, or even of a positive financial return. I want to be very clear of that. We can't guarantee it. We don't have the magic sauce. We don't have a crystal ball. But we have a strategy that has been proven over time to work. And being biblically responsible in your investments, folks, that's the engine, by the way, that drives our strategy. It's rooted in the scriptures. It will result in blessing from God. It will. Now, it's up to God to choose whether he blesses you in this life or in glory, or both. Oftentimes we find that it's both. It's not up to you. It's up to God. God will give the blessing as he deems fit. And for many, a faithful investor, perhaps they did not see the greatest return on their investments until they were in glory. And glory is far better. I'll take it in glory. But you will experience blessing if you choose to invest in a BRI way. That's really, really important, and that's really good. Because if you do it in that way, you're pleasing God. You're being obedient to God. And again, folks, it's not a guarantee of financial return here. If you get financial return here, that is awesome. That's awesome. But just know that it's coming in glory. And in glory, it's going to be far better than any trinkets that we receive here. So that's great. Great testimony from Ed there. And Ed, I appreciate you so much, as well as all of you listening. I see so many of you on the chat, John, Claude, Brian, UJ, so many on Facebook as well. I appreciate you all joining us so much today. And God willing, we'll do it again tomorrow. I want to remind you, join us for Bible study tomorrow morning if you haven't. 6:30 Eastern time. We'll be live at 6:30, and then make sure to join us for the show as well. Rapid Fire Friday. Shana will be on tomorrow. Folks, remember, all you have belongs to the Lord. Let's be found good and faithful stewards with the money that he has given us. Great to be here with you today, folks. We'll see you tomorrow for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.